loans from bank to bank and time to time. Among other retail loans, the home loans are issued at a lower interest rate. As a security towards home loan, borrower needs to provide first mortgage, registered or equitable or purchased land, already built or under construction house, or other immovable property in the favor of the bank. In case of registered mortgage, the charges are registered with the Registrar of Assurances. Guarantee is taken in the cases where margin is low or net worth of the borrower is inadequate. The documents that the borrower needs to provide to the bank for procuring a housing loan are promissory note, term loan agreement, letter of guarantee only if applicable, and an undertaking from the borrower for the payment of installments. The repayment of home loan is generally done in form of EMIs. The EMI is fixed on the basis of loan amount, period and borrower's cash flow. However, banks may allow borrowers to pay periodic interest till the possession of an under construction flat is not obtained. In case borrowers do not have an adequate income level for the likely EMIs, the banks offer lower EMIs during initial years and higher EMIs during later years. This is called step-up repayment. Vehicle loans. Vehicle loans are given to the salaried and the self-employed professionals for buying personal vehicles like car and motorcycle. Loans for commercial vehicles such as auto rickshaws, taxis, trucks, etc. are not covered under this segment. The period of loan for vehicles usually ranges from 3 to 7 years depending on the estimated income or cash flow and the nature or the cost of the vehicle. For example, loan repayment term for the old cars may be of 2 years. Generally, the floating rates of interest are applicable to the vehicle loans. The rate of interest is typically higher than that of the housing loan. As a security, the vehicle purchased is to be hypothecated in the favor of the bank. The hypothecation charges are registered with the Road Transport Authority. The EMIs are fixed on the basis of loan amount, period of loan, and borrower's cash flow. Consumer durables loan. The consumer durable loans are provided to the salaried and the self-employed professionals for them to purchase consumer durables like TV, music system, washing machine, air conditioner, fridge, etc. There are two types of agreements for consumer durable loans: hire purchase and hypothecation. In case of the hire purchase finance, the title of the goods passes on to the purchaser only on the payment of the last installment. In case installments are defaulted, the bank has rights to take the possession of the goods. In case of the hypothecation, the title of the goods remains with the purchaser and therefore the goods are hypothecated with the lender. In case installments are defaulted, bank has to follow the due process of law before taking the possession of the goods. Depending on the cost and nature of the product and the income or the cash flow of the borrowers, the period of loan for the consumer durable loans ranges from 18 to 48 months. The repayment of consumer durables loans is generally done in the form of EMIs, fixed on the basis of borrower's cash flow. As a security, asset purchased is to be hypothecated in the favor of the bank. Guarantee is generally not required, unless income or cash flow of the borrower is not adequate. Credit card and credit card loans. Banks provide credit cards to their customers. Credit cards allow cashless purchase of commodities like clothes, food at restaurants, air or train tickets, medical services, etc. Based on billing cycle, the free credit period for the credit card customers usually ranges from 45 to 60 days from the date of purchase. The monthly statement date for the credit card customer remains same, and the statement shows all purchases made during previous billing cycle, payments made, and balance payable. The due date in each month for making the credit card payments are fixed by the bank. Payments not made within the due date of payment are termed as overdues. On the overdue amounts, interest of 24% per annum or more is charged. Further, service tax is also charged on the interest amount. Some banks offer EMI conversion of the due amount on credit card. This helps the borrower in paying the large amounts in parts as EMI. Such conversion of loan helps in reducing the applicable interest. Personal loans. Personal loans are provided to the individuals for them to use the amount for any personal purpose. Banks also offer these loans to the rural people facing financial problems due to crop failure, etc. The period of personal loans generally does not exceed 36 months. The repayment of personal loans is generally done in the form of EMIs. Generally, the floating interest is applicable to the personal loans. The rate of interest on personal loans is higher than any other retail loans. If the income or the cash flow of the borrower is adequate, the bank does not require guarantee for providing personal loans. Overdrafts. The overdraft facility is provided to the current account holders who are eligible to overdraw up to a sanctioned limit. These loans are provided to the individuals to meet their contingency expenses. The overdrafts are payable on demand. The floating interest is applicable to the overdrafts. The rate of interest is highest in the retail loan segment. The security for overdraft is required only if the large amount is being drawn. Generally, the fixed deposit receipts or the bonds are taken as security. If the security requirements are met, overdrafts do not require guarantees. Overdue in retail loans. Due to the fast growth in the number of accounts, increase in volume of retail loans, and limited human resources in the banks, it is becoming increasingly difficult to collect debts from the non-paying borrowers. This poses a threat of such loans becoming a non-performing asset. To manage the timely debt collections and to avoid the loans becoming non-performing assets, banks started outsourcing the debt collection functions to the external agencies. Summary. The retail loans are the loans offered to the individuals by the banks. Some typical products offered in the Indian retail lending segment are home loan, loans for consumer durables, vehicle loans, credit cards, educational loans, personal loans, loans or advances against shares. The equated monthly installment or EMI is a loan repayment method.